So hello guys, so today I'm going to show you how I got this beautiful setup. Well, at first I was stopped out, then I got this lovely setup and I took the trade in. On the previous day I showed you, in my previous video I showed you how I got these two setups, this buy and that sell. So let me delete all this and we'll start afresh. So I want you people to notice, in this video I'm not going to talk about MSNR or SMC. I'm going to talk about something, how will I say it, I learned myself using my experience in gold, something about interliquidity trading. Let me look for the path. Where is it? Yeah, so I want to teach you something here. When the market is like this and then it lacks enough volume and it creates its own liquidity, before that, let me call it a downfall, it usually takes out this high. It usually comes and takes out that high to around there, then it falls to these levels. I don't know how to explain it, but I'll use examples. That's what I learned. It's not a strategy, it's not anything, but it's just it will give an upper hand in the market, especially in gold actually. So let me delete that. So what I'm saying is, and the vice versa is true, if the market is maybe on a downtrend and it goes something like this, you can see literally there's nothing the market is doing, just creating some liquidity. It will take out this high most of the times, or a point of interest around here, and then it falls, sweeping all this liquidity, sweeping all this liquidity, the stop losses of the traders. So let me show you how I took that recap of yesterday. So at first I came to the daily. Before that buy that we had, I came to the daily and I marked out my zones, my A levels and V levels. I've talked about them every time in my videos. So let me switch to this a little bit. So I marked this level. You remember it that we took a sell here somewhere. After marking that level, it was an A level that was touched. Then previously there had been a gap. So whenever you see a gap, it's so simple. The market comes to fill the gap. So you go at the end of the gap. That will be my TP. Without even looking for anything else, the market was around here back then. The market was around here. It had opened. It was around here. So what happened is that I marked at the end of the gap, then came back to my daily. We're starting from the daily to look at the trend. It was downtrend. I was not sure about this fair value gap. There's this fair value gap right here. It has not yet been mitigated, but it wasn't mitigated back then. Okay, it was slightly mitigated, but I don't count this. It's not that valid for me because it should be at least at the 50% of it. Either way, so I came back here. So I went to the 4 hour to confirm. In the 4 hour, what did I see? I saw we had swept a previous high. We had swept this. We had swept that high, but it was still not enough confirmation for me, right? So I came, just a minute, let me mark my previous lows that I wanted to set them as my TP. I knew the trend of the day was bearish, and I knew that it had touched an A level previously in the daily time frame. So I came to the 4 to see if it was valid, and I looked at here. We talked about MSNR and we said when a level is fresh, it usually has, let me draw the boxes, the rectangles. If this is a zone, this is a candle, and okay, let me be real quick with this. That's a week, and then this is the body of another candle. We said that in MSNR, if this is a candle, these are candles, maybe this is bearish and bullish. No, let me put it bullish and bullish. Yeah, if this is a candle, green, and green. I mixed up the colors, but you get the point. If this is a bullish candle, there is no level right here. But if it was like this, if the level was like this, and this one, and this one was a bearish one, that's a level here. This is a level. If you go to the line chart, you will see that this zone here forms something like an A shape, forms this shape in the line chart. It's a level. So this is this actually, but this is a candle chart, this is a line chart. So with all that, I talked about a level will be fresh until it is wicked out by another candle, another candle in the week. So let's say something like this. That is a bearish, that's a bullish candle with a long wick. With a long wick like that, this zone is unfresh, it was wicked out. But if something comes up here along the way, a candle with a body that passes it, let me delete all these lines. You see, this line was a fresh level, then it became unfresh, then it became fresh again. If you see a body candle that has passed it, not a wick, it becomes fresh again. So in all that, this is what we looked at here. So I came here, this was our level. As you can see previously, it was an A level that got wicked out severally, so it became unfresh. Then here, let me zoom in for you people to see. Then here, it became fresh again. There's this body candle. So this, now it has become unfresh, but it became fresh here after this body. The body like cleanses it. Let me say something like that. So with all that, I was sure my bias was bearish. It was a downtrend, and I came to mark my first TP was here. Literally, my first TP was here in the gap. My second TP was that low, and my third TP was here. As I have said, this stuff mostly respects the V level. That's why I did not put it here. But you can put at the low, but I prefer here, just to avoid it reaching almost my TP and taking me out and reversing. So that was my bias. That was my take profits. So I came to the 1 hour time frame. It's kind of my favorite, and I waited for liquidity. So the market at that time, I'll pay for my trading view. Relax guys. So the market was here. The market was here by then. I don't know if I'll put this chart like this for you people to see. So the market was kind of like this. So what did I do? I came here and I waited for liquidity. At first I thought I put my gun box. Where do I keep this stuff? I came here and I put my gun box from this low to that high, and I told myself I'm trading in the premium zone because it's a sell. So the upper zone, that's what I looked at. And here I came and I saw this. These are my levels. Let me show you in the 15-minute time frame. So I marked this out all as liquidity, because you never enter a trade unless there's presence of liquidity. If you do not see the liquidity, you are the liquidity. So I can put my trend line here. I marked all this as liquidity. That was liquidity. So that was my first entry. So my entry was here. Let me remove the gun box. My entry was this line. So this is why I entered short here. My stop loss was above these small highs here. I counted from the first, the second, and the third. So here was my stop loss. And my target was way down here. My first target. It's not supposed to be there, it's supposed to be here. My target was there. And clearly, I was wicked out, as you can see. I entered the trade exactly there. It went out, got me wicked out. Then it created this liquidity, what I'm talking about, the intra liquidity. That's the market tends to create itself some liquidity if there's no volume in the market. As you can see, around that time it was entering the New York session, so it had to create some liquidity before the downfall. That's the logic I started the video with, telling you to create its own liquidity before it falls or it rises. So so after I was stopped out, I still knew it was bearish, so I waited, and I knew when I was stopped out it was somewhere around here, so I came here. I was stopped out at exactly here, this small, oh my god, this wait just a minute, I was stopped out here, literally here. It sucks, man, it sucks, but no problem. So I came out for another re-entry, and I saw this gave me an extra confirmation that it was on a downtrend. I saw this, what I've been talking about. With my knowledge, I knew what I was talking about. I knew that it must sweep then this high that created the liquidity, that internal liquidity. I knew it must sweep that high, so I came here. My second entry was here. I waited for it to sweep that high. I came to the 5-minute time frame. I came to the 5-minute time frame. I waited for it to show me a good change of character, and I saw it right here after it broke this. My change of character, it was right there, so I waited for it to retrace back then. So again, with my gun box, you can just use a rectangle. It still has a 50% line or a Fibonacci. So with my gun box, I came here in the premium zone. Obviously it was this upper half, so I came here looking for point of interest. A minute, let me return it. Let me put a rectangle for us to see, because I want to get away with my gun box. I don't like my chat being noisy. So I came here to look for a point of interest after it had swept that high. I saw this. Now the rectangle is a bit messy also. So in the 15-minute time frame, I saw this fair value gap. I saw this fair value gap here, but I want to tell you a reason I did not enter it, because I did not see presence of liquidity. I saw this, and in my opinion, if the market did something like this, I would have entered here. You see, presence of this liquidity, then I would have entered short, but it did not give me a presence of liquidity, and I really respect my principles, so I just waited for it, and you see it was invalidated. After that, I came to this order block. At the time it was not yet invalidated, but I was not sure. I thought I would miss the entry. Then I came to this order block. After seeing this, I told myself, this, let me mark it, this will not be my liquidity, this. So when it came to the other block, I entered short. At the open close. We've been talking about this. I said the best place, like way to wix it, it's the open close of the candles. We talked about it in my previous video. If you have not yet seen it, you can go back and see. So I entered here at this open close. It's not a good open close, but it's kind of an open close. I entered there. My stop loss was above that high. I was almost being stopped out. Just a minute, I came to the 15-minute time frame. What was it? Yeah, my stop loss was above this high. It's not that high. It was above this size. Here, don't mind me. Wait just a minute. Not that high. This one, the maximum one. Don't mind me. I like using a tight stop loss. I don't know why. So I was near being stopped out on this one. A minute. Yep. My take profit, we said it was the first one, was the gap. That was my TP1. My TP2 wasn't this low. Let me refine it. Wasn't that low. And my TP3 is not yet, it has not yet been reached, but it's supposed to be. Let me refine it. I hate putting a large TP, a far away TP, then it's not yet reached, then the market reverses. So I just prefer small ones. But I think it's not that small, it ain't that small. So I'm still running the trade. But on break even, I'm still in on break even, just in case of anything. Yeah, and that's how it was. You see, it was so near touching my stop loss again. Right here, I entered. The first one was this, and the second one was this, a re-entry, and it was perfect. Look at it. It was beautiful. It's still running. I was waiting for a buy. I thought somewhere around here. Let me show you. I had another point of interest here. I'm expecting a good reaction right here on this low, but I think before it reaches that low there'll be a retracement, so that's it's not my TP. I'm waiting for a good reaction from here because I take all this as, let me show you, let me draw something. All this is liquidity, all this is liquidity. To here, that's liquidity. To here, that's liquidity, and now to here. So I'm expecting all of it to be swept out. So I'm looking for some entry right here, but not yet. I'll show you in the next video. We can start doing some prediction of the market. Yeah, that's it for today. So it was so basic. I want to talk about this. This was my key thing for today. What gave me a clear confirmation? This. If I do more research on it and find something behind it, I'm sure there's a strategy behind it. I will talk about it. Must sweep that high, then it falls. Oh, I forgot to tell you, when it falls, it targets this liquidity 1. These are supposed to be your TPs, liquidity 2, 3, and here 4. But in the TP of this fourth one, it's usually not the wicks. Most of the time you'll find it something like the V level. So that's why I tend to put my take profit somewhere around here instead of the wicks. Here in these levels, you see the reaction we had on this level, this V level. Let me show you these V levels. Those are supposed to be my TP. The wick, sometimes it comes and it retraces right here, so you'll have a couple of dollars, but you will not have taken them out because it's starting to reverse, so you'll still be in. I prefer small TPs than losing a TP. Partial profits than losing it all. And that's for today. Thank you. See you in the next video.